What is DeFi? You've probably heard the term thrown around in crypto circles, headlines, and YouTube videos. But what does it actually mean? And why does it matter now, more than ever in 2025? DeFi, or Decentralized Finance, is one of the most revolutionary developments to come out of the blockchain world. It's not just another trend or buzzword, it's a complete rethinking of how financial systems work. If you've ever used a bank, taken a loan, traded stocks, paid interest, or even just tried to send money across borders, then you've already interacted with the legacy financial system. DeFi is a radical alternative that doesn't require banks, intermediaries, or permission from anyone. It's financed by the people, for the people, powered entirely by code. To truly understand DeFi, imagine the financial world rebuilt from the ground up on blockchain infrastructure. Every traditional service, loans, savings accounts, insurance, trading platforms, even complex derivatives exist in this new world, but without centralized control. Instead, it's all governed by smart contracts, self-executing programs that automatically follow the rules written into them. These contracts live on decentralized blockchains like Ethereum, Avalanche, Solana, or others, and they cannot be tampered with or shut down. No customer service reps, no delays, no discrimination. Just programmable finance available to anyone, anywhere, anytime. Let's say you want to lend your money. In a traditional system, you deposit funds into a savings account at a bank, which lends it out and gives you a tiny fraction in return. In DeFi, you deposit your crypto into a lending protocol like Aave Compound, and instantly you start earning interest directly from borrowers. No paperwork. No approvals. The smart contract does the job of the bank. Everything is transparent: rates, balances, loan terms completely visible on the blockchain for anyone to audit. Want to borrow? In TradFi, you need a credit score, bank history, collateral, and approval. In DeFi, you connect your wallet to a protocol, supply collateral like ETH or stablecoins, and borrow against it instantly. If the value of your collateral drops, the system automatically liquidates your position to protect the lenders. It's trustless and efficient, and you never need to reveal your identity. Trading is another massive shift. On centralized exchanges, you need to sign up, verify identity, and trust the platform to custody your assets. With DeFi, you trade peer-to-peer through decentralized exchanges like Uniswap or Curve. Your tokens never leave your wallet until the trade is executed. There's no middleman, no downtime, no hacks of centralized treasuries. Everything is governed by algorithms, running 24/7, with prices determined by automated market makers rather than order books. But DeFi isn't just about mimicking traditional finance, it goes beyond. Because everything is open source and composable, protocols can be stacked and combined like digital Lego blocks. For example, you can use a lending protocol to borrow stablecoins, then use those stablecoins in a yield farming protocol like Yearn to earn more interest. You could ensure that strategy using a DeFi insurance provider like Nexus Mutual. Then take your profits and stake them in a governance protocol to earn voting rights and fees. This kind of layered financial engineering, available to anyone in the world, is completely unprecedented. One of the biggest drivers of DeFi's rise is accessibility. Billions of people around the world are unbanked not because they don't want financial services, but because they can't access them. No government ID, no nearby bank branch, no credit history. But in DeFi, none of that matters. If you have a phone and an internet connection, you have access to the global financial system. That's not just innovation, it's empowerment. In 2025, DeFi is no longer a niche experiment. Total value locked in DeFi protocols has surged past the trillions, and major financial institutions are experimenting with integrating DeFi rails into their systems. Real-world assets are now being tokenized and traded in DeFi: government bonds, real estate, invoices, equities, bridging the gap between traditional finance and the decentralized future. Governments and regulators have begun creating frameworks for DeFi compliance, and many projects are implementing KYC layers, decentralized ID, and proof of reserve mechanisms to comply while staying true to the DeFi ethos. But DeFi isn't without risks. Smart contracts can have bugs. Exploits and flash loan attacks have drained millions in seconds. Projects can rug pull, disappearing with user funds. Yield farms offering triple-digit returns often carry unsustainable risk. And since you control your own wallet, if you lose your keys, your funds are gone forever. There's no help desk. No password reset. You are your own bank, and that means total control, but also total responsibility. Security has become a top priority. Auditing firms, insurance protocols, and code bounty programs have all matured, making the space safer than it was a few years ago. But users still need to be informed. DeFi is not something you jump into blindly. You read the docs. You test with small amounts. You ask questions. You learn. One of the most beautiful aspects of DeFi is transparency. In TradFi, you never really know what a bank is doing with your money. In DeFi, every transaction is on-chain. You can see the reserves, the borrowers, the yields, the protocol changes. Governance happens in public forums. Proposals are voted on by token holders. You don't just use a platform, you can participate in shaping its future. This new model of finance is more than just technology. It's a philosophy. A belief that finance should be open, fair, and programmable. That opportunity shouldn't depend on your ZIP code or your passport. That if you choose to take responsibility for your money, you should be able to access every tool the traditional system provides on your own terms. As we move deeper into 2025, DeFi is evolving in exciting directions. Cross-chain interoperability is unlocking seamless movement of assets across different blockchains. Layer 2 scaling solutions are slashing transaction fees and increasing throughput. Real-world asset tokenization is integrating traditional markets into the DeFi landscape. And DAO decentralized autonomous organizations are reshaping how teams build, govern, and grow financial applications globally. We're witnessing the birth of a financial operating system that isn't controlled by corporations or governments, but by communities and code. A system that is global by default, permissionless by nature, and transparent by design. A system where your assets are always under your control, your data is yours, and your opportunities are not defined by legacy gatekeepers. So when someone asks, what is DeFi? The answer is simple, it's the future of finance. A future that's faster, fairer, and more open. It's not perfect. It's not without danger. But it is a giant leap forward in reimagining what money can do when it's powered by open networks instead of closed doors. And now, you don't just understand what DeFi is. You're part of the first generation to witness its rise. Whether you choose to explore, invest, build, or simply observe, you're here at the beginning of something transformative. This is Decentralized Finance. And this is just the beginning.